Despite trade issues with the United States, China reported it has witnessed a trade surplus of $1.2 trillion. Lars Halter is with DW and joins me from Berlin. Lars, how does Europe factor into these trade numbers?
Thanks for having me. Well, Europe and particularly Germany are playing a major role in all this because as China's trade with the US has indeed dropped steeply after Washington has levied tariffs on the country, China's trade with Europe has indeed skyrocketed to a point actually where exports to other markets have actually grown so much that it more than made up for the losses in the US business, and that we're seeing China's net exports actually grow 5.5% last year. At the same time, China is importing a lot less, Beijing seeking to replace many imports with products made in China. And together, all this leads to this record trade surplus. Now, for some concrete numbers, looking at Germany, Chinese exports are up over 10% for the past year, while Chinese imports from Germany are actually down 2.1%.
But how did this change in trading patterns happen so quickly?
Well, it hasn't really happened that quickly. Obviously, looking at this past year's numbers, they suggest a quick change. But in fact, the US implementing tariffs on China was really only the trigger for a tidal change in trade that has been in the works for years, actually even decades. Here's the thing, China has never played fair on the world stage when it comes to trade. And the EU has regularly criticized the country for doing so. There's so many examples of what went wrong too. There's the fact that Beijing has always generously subsidized Chinese companies to allow them to produce cheaper than companies, let's say, in the EU. There's also the fact that Chinese companies often bought up or invested in foreign companies, acquiring intellectual property along the way, all while China did not allow foreign companies to invest in China, or at the very least, only after forcing them into joint ventures with Chinese partners. And then, for many, that's the main point, there is the weak renminbi. Experts are saying it is around 40% undervalued. And one should know that the Chinese currency is fully regulated by the Chinese central bank, with rates not being subject to foreign markets. Now, this strongly undervalued renminbi gives China an immense advantage in global trade.
Lars Halter, thank you.